Hello and welcome to Mortgage Mastery. I'm Kara Lowry with Acadiana Mortgage, your local lender for over 25 years. So today let's talk VA assumptions. So we are VA specialists here at Acadiana Mortgage and we do a tremendous amount of VA loans. But every now and again it comes up of what can I do to sell my house on an assumption? So I tell all of my clients, and have been doing so for over 30 years, is that if someone approaches you about selling your house on an assumption, please reach out to me first. Let's make sure that you're protected, meaning let's also make sure that they qualify. So two main components when discussing VA assumptions. One is the liability component. The second is the eligibility component. So a non-veteran can assume a VA loan, but your certificate will stay on the home until that loan is paid off. So let's talk about liability first. So liability, so number one, we've already talked about the fact that they have to qualify. It is a qualifying assumption. So if they qualify, then we also want to make sure that it comes off of your credit report. So if they start making payments late, we don't want that showing up on your credit report, or Lord forbid, if they let the house go into foreclosure, that it shows up on your credit report. So we want to make sure that you are released of liability. The second part is that eligibility component like we talked about. A non-veteran, as I said, can assume your VA loan, but your VA stays on it. So someone approaches you and says, I want to buy your house on an assumption. So the very first thing you're going to do is you're going to call me first because we want to make sure that you're protected. So assuming that they qualify, so then we talk about whether they're a veteran or not. So if they're a veteran and they can substitute their own certificate, fabulous. It's like walking away, like a clean divorce, no ties, you're done. You can move on about your life and move around the world, but yet their eligibility will now be on the loan. You've been released of liability, so again, you're clean, no ties. So if they don't have their own certificate, then you need to determine whether you're going to be okay with that risk, in that if they start making the payments late, or if they let the house go into foreclosure, that you could lose your certificate of eligibility. So assuming that we've crossed that threshold, then the next part is to determine how much equity you have, and are they going to have enough cash to give you your equity? Because remember, this is not a true buy-sell. There's not going to be a loan amount done. Let's say, for example, your house is now worth $200,000, but the loan that you owe is $150,000. So they're going to assume that $150,000 loan amount, but yet the difference between the loan amount and what your house is currently worth, well, you're going to be looking for that money. And unfortunately, this is where the majority of assumption conversations usually stop, because they don't have the equity, or they don't have the cash to give you your equity, nor do they have money for closing costs and prepaids, because again, you have your own escrow account that you currently have there in escrow. And then number three, is there a realtor involved? Because those fees also would need to be paid, and so that cash also has to be had or to come up with. So that's usually where things stop. But let's assume that we're here and all of those things have fell into place. Then we want to make sure again that everything is the way that it should be. So you will put in a call to your current servicer. And your current servicer, you'll let them know that you're wanting to sell your house on an assumption. They will mail you an assumption packet. So then because they're not going to send it to anyone else, because again, for privacy reasons, they're only involved with you, right? So if you get the assumption package, then you are welcome to hand it off to someone that's wanting to buy your house on an assumption. So then they'll have an application fee historically, and then they will do the loan application and everything through the mail, typically with your current servicer. And keep in mind, servicers are not incentivized to keep this loan on their books, right? So would you want to keep a loan for 30 years at 3%? So unfortunately, sometimes servicers are not real keen. Sometimes they'll kind of drag their feet. I've even heard a lot of stories recently of where they are just choosing to not even respond at all. Unfortunately, that is not the intent of a VA loan and it being assumable. So if you have had that situation, or you know of someone who is, have them reach out to me and I can give them the contact information with the Department of Veterans Affairs on where they would need to make a complaint. So again, they do everything through the mail. And then once their loan is approved, then we would be able to close on the assumption, because again, closing costs and all of that still have to be paid. And then you go to closing is complete, and then you're able to hand over the keys. You'll walk away with the closing with your equity that you wanted out of pocket, and then basically you are done at that point. VA assumptions in a nutshell. So again, make sure you're protected. Do they have their own eligibility or do they not? And they have to qualify. So if you have any other questions, please don't hesitate to reach out. Kara Lowry with Acadiana Mortgage, 549-2800. And again, we appreciate you watching our Mortgage Mastery topic on VA assumptions. Please check out all of our other exceptional videos.